Joining me now in an exclusive interview is KKR co-CEO Joe Bay. First time on CNBC. Welcome. Good to see you.
Thanks, Sarah. Great to be here.
First, I have to ask you about this First Republic deal with JP Morgan. Has any of the regional banking drama affected you?
Well, we at KKR, we have no exposure to First Republic to start. Based on what I've read in the papers today, it seems like JP Morgan got a pretty good deal based on how the markets reacted. But I think we're very supportive of how the regulators and the FDIC are handling this to really try to nip the systemic risk very quickly and be proactive. I think on a bigger picture level, though, you're seeing more constraint in the credit markets as banks pull back. And that's going to create tremendous opportunity for the private credit industry, of which we're a pretty big participant today.
I was just going to say, where are the opportunities for you? It's in that private lending to small business?
So we have roughly $500 billion under management right now. The biggest piece of that, roughly $200 billion, is actually in our private lending business. So while other parts of our business may have a slowdown in deal activity, we're seeing a tremendous opportunity right now in credit and in asset classes like infrastructure.
What does that mean for the overall economy? Does that mean that the credit crunch that everybody's worried about isn't going to be as severe with so many? I mean, everybody here that I've talked to says this is the moment for private lending. We're going to step in.
Well, I think in these moments where banks are constrained, capital markets liquidity is actually at an all-time low since the GFC. So you need other forms of capital to step in. So private credit is clearly one of the most attractive forms of capital for companies, for founders, for entrepreneurs who need capital at this moment in time.
What is your view of the U.S. economy right now? You have so many different businesses, from dental to veterinary to insurance.
Sure.
People don't realize between the investments and the portfolio companies. What are you seeing?
Listen, I think we're facing the same pressures that the broader U.S. economy is facing. Rates are going up, so the cost of capital is going up. You're seeing access to capital, both in the equity and debt markets, more constrained. And at the same time, we're all trying to manage through this inflationary environment. I think our expectations are inflation is going to be stickier for longer for a lot of big structural reasons. But that means we need to be more thematic in the types of businesses we buy, the type of collateral-based assets that we're investing behind. Real estate, infrastructure are just a couple of examples of that.
You expect inflation to stay higher for longer than the market expects?
Yes, I think from our view, labor is obviously very tight. You have the structural undersupply of housing in most major markets, including the U.S., and then you have this incredible investment happening around energy transition. The capex associated with that is going to be inflationary to commodity costs.
What about deal making? If the financing conditions stay tight, what does that mean? Bruce Flatt just told us we're seeing some action that we wouldn't have seen 4 months ago. Do you agree?
I think for high quality businesses, high quality credits, financing is still available. But I think what's challenging today is not so much the credit availability, because there are a lot of private lenders out there. I think the challenge today is valuations. You need a willing seller and a willing buyer, and today there's still a mismatch in the private markets around that.
Is that what I was going to ask, what you're waiting for? You have what, $108 billion in dry powder?
Right.
You're waiting for a price correction?
Listen, I think today, May 1st, is actually our 47th anniversary at KKR. So we've been in business for almost 5 decades in private equity. We've seen a lot of cycles, ups and downs. And in our experience, the best buying opportunities and investing opportunities are in periods like this, periods of real volatility in the marketplace. So we're being patient. We know there's going to be some great opportunities in the coming years, and we've got a lot of dry powder to put to work.